One of my favorite sayings when it comes to the stock market is that in the short term, the market is a voting machine, while in the long term, it is a weighing machine. And what we are seeing right now with UNH is a lot of investors voting that the company will not be able to get back to previous EPS highs. However, what really matters is what happens in the long term and if the weights of EPS can pull the stock price up over the next few years. And that is what investors need to be asking themselves if they are considering an investment into UNH. Can this company return back to previous all time highs for EPS? If we look at their pure top line numbers, I think that there's evidence here to say that the company should be able to achieve this. What we have seen over the last few years is continued growth for their revenue numbers. Right now, they are growing their top line by almost 13% as of their most recent earnings announcement. They have around $422 billion of top line revenue. If we go back to 2020, they were bringing in $257 billion of top line revenue. This number becomes very important when we look at their EPS. And that's because when we look at their EPS numbers, right now they have a trailing 12-month EPS of $23.09. However, by the end of the year, right now the company has provided guidance for around $16.50 of trailing 12-month EPS. If we go all the way back to 2020, they were bringing in EPS of $16.03. So over the last 5 years, they're expecting EPS to be at the same levels as 2020. However, revenue has gone up by a significant margin from $257 billion to $422 billion. That is almost a double up on their top line numbers, while their bottom line is sitting about the same. And ultimately, the reason that we are seeing EPS flat over the last 5 years, despite this massive increase in revenue, has to do with the company's medical loss ratio. Back in 2020, their medical loss ratio was 79.1. Here in 2025, they just reported a record high medical loss ratio of 89.4. That is a 10% difference in the amount of money that they're having to pay out for medical care versus what they are bringing in terms of premium. To put some additional context around these numbers, this is the medical loss ratio from 2020 all the way through till 2025. Here is their most recent quarter, that 89.4%. And then here's that 79.1% that we were just talking about at the end of 2020. What these medical companies like to target, and even the government wants these companies to target this range, is somewhere between 85 and 80 for a medical loss ratio. We can see that for the majority of the last 5 years, they have sat in this range. However, more recently, we have seen an increase above this 85% mark, and then this dramatic jump up to this 89.4% medical loss ratio that we have seen in Q2 of 2025. And ultimately, the way that they get this under control is by increasing premiums. Well, there's a couple of different ways. The most straightforward way is increasing premiums. Right now, it's projected that premiums for medical companies will increase anywhere between 15 and 20%. But what we could additionally see is some of these companies split off some of these more expensive procedures into higher priced plans. That way, people that need this coverage can pay a little bit of additional money to get that coverage, while the rest of the group does not necessarily have to pay an increased premium despite their coverage not really changing. And actually, what we are seeing from some of these insurance companies is they're just dropping coverage coverage altogether. The one that has brought the most attention to the news is dropping coverage of GLP-1 drugs specifically targeted for weight loss. There's GLP-1s that are targeted for diabetes. Those tend to still be covered under insurance plans. However, the ones targeting weight loss have actually been dropped by a number of different insurance companies because they tend to be on the more expensive side. So in my opinion, when I look at UNH, I see a company that is still growing their top line significantly. We have seen them almost double their revenue over the course of the last 5 years, yet their EPS is expected to come in around the same. But the reasons for this dramatic fall in EPS are a couple of things really revolving around higher healthcare costs, specifically their medical loss ratio. And these should all be addressable over the course of the next year. So I see a company that is severely undervalued for how they should perform over the next 2 to 3 years. Another way of seeing if UNH is undervalued or not is a method commonly used by Peter Lynch. What he would do is he would look at the company's stock price and compare it to a valuation multiplied by the earnings per share that the company is putting up. And that's what we are showing here for UNH. We have their price in dark blue, and then we have a few different PE ratios that we are looking at. We're looking at a 15 in red, a 20 in green, and then a 25 PE ratio in yellow. And what we've seen over the last 5 years is that UNH has most commonly lined up with this 25 PE ratio. We could see that back in 2020 and 2021, it was actually trading below this valuation, despite earnings being relatively high. And that would have been a great time to buy because over the next couple of years, the stock price shot up and it was trading much more in line with this 25 PE ratio. And we can see that kind of represented here. However, the stock went in a dip in 2023 and even into 2024. And that again would have been a good time to buy as the stock price was trading below this 25 PE ratio because you could have capitalized on some upside here in late 2024 as the stock moved up over that year time period. What we are seeing today is the stock has moved down in a massive way, and it is now trading below this 25 forward PE ratio. Obviously, past performance does not necessarily indicate future results, but going back to the saying that the stock market over the long term is a weighing machine, there is no doubt in my mind that if UNH is able to return to EPS numbers around $23 to $24 per share, we should see the stock price return to a range of $500 to $600 per share. And by the way, if you're wondering why there's this dramatic drop in the yellow, green, and red lines, that's because the company had a negative quarter of EPS associated with costs around their cyber attack that happened in Q1 of 2024, as well as the sale of some of their Brazilian business that all drove their EPS down during that time period. This was seen as a very short-term event, and if you equalized it out, you would have seen these lines kind of sit more in line with this $23 to $24 of EPS. But of course, full disclosure, I do hold shares of UNH. This is the YouTube portfolio, and right now it's sitting at a total value of $74,415.19. And we are up almost 29% year to date. And right now, within this portfolio, my third largest position is UNH. I have 24 shares for a total market value of almost $7,500, and we are up almost 7% on this position. Keep in mind, this is a smaller portfolio. I do have a larger portfolio that has a much larger position in UNH. And keep in mind that I am very bullish on the healthcare industry. You can see this by a second position that I have in Oscar Health, where I have 225 shares for a market value of almost $3,800, which is up almost 20%. And these are the most recent additions additions to my portfolio. Again, because I see so much potential in the healthcare industry, I think that over the course of the next year, we should see outperformance from these types of companies. But of course, don't buy a stock just because some random guy on YouTube talked about it. Let me know your thoughts down below. Do you think that UNH has what it takes to get back to their previous all-time highs for EPS? I personally think that that will be the case, and that is shown in my portfolio. However, I'm interested in your thoughts. What do you guys think? Do you think UNH can get back there? What do you think their price target will be? Do you think their valuation will be somewhere around a 25 forward PE ratio? Do you think it will be more than that or less than that? I'd love to hear your thoughts down below. While you're down there, drop a like on the video and subscribe for more videos like this one. And as always, have a wonderful rest of your day.